Okay, so I'm starting now. Okay, so this is our first session of volume analysis. So today I will explain the very basic concept of volume analysis. Slowly, I will explain all the deep knowledge and all the signals of volume spread analysis. So first of all, we have to know what is volume and what is spread. So volume is the amount of an asset or security that changes hands over some period of times. Okay, so we see this type of candlestick in the market. This one, different types of candlestick like this one. This is the bullish candle, and this one bearish candle. Okay, so this is the high price of this candle. This is the low price. This one opening price, and this one closing price. And here to here, this is the body part of this candle, and this is the opening price. This one closing price. This one high price, and this is the low price. And this one the body part of this bearish candle. Okay, so this body part is called the spread. This one spread. Okay, and this one also spread. So in our platform, each candle, if we add the volume bar, each candle have a volume bar like this. Bullish candle have this type of volume bar. It may small, it may large. So this type of volume bar. So we have to analyze this volume bar with this spread. That's why this is called the volume spread analysis. So how we can analyze this spread with the volume bar? So slowly I will explain, and I will give all the signal. So volume signal. So in the market, if we observe, we see market create different types of candlestick like this one. It may bullish candle, and this type of bearish candle, and this type of candlestick also, bullish candle, and this one the bearish candle. Okay, so this one. So sometimes what we see, this type of candlestick, market create. So when market create this type of candlestick, sometimes we get this one. The volume condition is this one, this candle volume, this bullish candle volume, this one. Okay, and this bearish candle, that volume is this one, and this bearish candle, that volume is this one. This and this. Okay, so if we observe this candle size, that means this spread, that means this body part, and this volume bar. This is the strong body candlestick, spread is large here, volume also high here. And here the spread is small here, volume is also low here. So when market create this type of situation, this is called the validation. Valid. This one now valid. Spread is large, volume high, and spread is small here, volume low here. So now we can call this condition, this volume condition and this spread condition. This is called validation. It's valid. Validation. Okay. This two situation, it's a validation. So sometimes what we see in the market this type of situation, market creating this candlestick and this candlestick, and this one, this one. But if we see this type of candlestick and this is the volume condition and this is the sometimes it happen in the market that not sometimes, most of the time we see market may create this type of situation or market may create this type of situation. So in this case, when we get the small size volume is low and spread is strong, that means a strong candle volume low and weak candlestick volume high. So this is not valid. So now we can call this condition is anomaly. It's not a valid because this one valid. A strong body candlestick, that means the spread is large, volume high, spread is small here, volume low here, it's valid. But in this case, it's not valid. So when it's not valid, we can call this term as anomaly. Okay. Okay. So this is the single candlestick spread, single candlestick volume, strong body candlestick and large volume, weak candlestick and small volume. It's valid and it's anomaly. Single candlestick analysis, single candlestick analysis. But when we work in the market, that time we face so many candlestick in a row and each and every candlestick have volume bar. Suppose market is now in an uptrend situation, that means market is going to the upward direction. Okay, think that market is now in a uptrend situation, that means this one first candle, second candle, third candle, and now it's a fourth candle. So if we observe this market condition, market is slowly become stronger here. So first market create this type of small body candles, that means spread is very small here. If we get this candle volume is this one. Okay, so now this candle volume is this one because we get for each and every candlestick one volume bar. So this candle volume is this one and second candle volume is this one, third candle volume is this one, and fourth candle volume is this one. So now what information market is giving us? Market is giving us here slowly market became stronger, that means market creating strong candlestick and volume slowly increased. So there is no wrong here. Everything is okay here. So market is very strongly uptrend situation right now. And it's a very perfect market condition. It's a validation. So this is the multiple candlestick analysis. It may happen like different way little bit. So I'm drawing here. First, suppose market create first this candlestick. Second candle market create this one. Third candle market create this one. Fourth candle market create this one. So when we see this type of situation, and if we see this first candle, volume is this one. Second candle, volume is this one. Third candle, volume is this one. Fourth candle, volume is this one. It's also valid. Why? Because market when creating small strong body candlestick, that means spread is large here, volume also high here. Suddenly market create this candle, this is a weak candle than this one, volume decrease. So again market create this strong candle, then this one, volume again increase. So there is no wrong here, everything is okay here. Again market create this candlestick, this candle is weak candle than this one, so volume again low here, so it's also okay. This is called also a validation. But when market create this type of situation, first candle, okay, second candle, third candle, and the fourth candle. So market step by step become stronger like this one. But if we observe the volume condition, first candle volume is this one, it's okay. Second candle volume is this one, it's also okay. But when market create this third candle, volume this one, and when market create fourth candle, volume this one. So now what information market is giving us here? So now market is uptrend market, it's also okay, and the volume, the spread is slowly become stronger, it's also okay. But if we observe the volume condition, the volume condition is not okay here. So this one and this one, it's valid, it's a validation. Because why? Because the volume is low here, candlestick weak candle, volume low. Second candle is strong than this one, volume high. So when market create third candle, volume not increased here, volume decrease here. So again market create a fourth candlestick, very strong candle than all others candlestick, but volume more low here. So something happening wrong here in the market. So it giving us information that something is wrong in the market right now. So market may change its direction at any time. So see here, when market create this candle and this candle, it's okay. But when market after this candle market create this one, volume decrease. So what information market giving us? There is something wrong happening wrong in the market. Market may change its direction at any time, but it doesn't mean that market reverts suddenly from here. No, it's not happen. So when and how market change its direction, and when and how market reverse, this is the totally different thing. So I will explain it slowly. So first of all, we have to know the very basic concept. So each and every volume signal are the pre-signal of the market. When market giving us information, when we get a signal, or when we get any this type of imbalance in the market, it giving us information that something happening wrong in the market may change its direction at any time. It doesn't giving us information that market immediately reverse from here, because each and every signal is a pre-signal. So this is the uptrend market situation. So same thing we can call in the downtrend market. So when market condition is like this type of this one, first, second, okay, third, and fourth. When the volume condition is like this, first, second, third, fourth, that means it's a validation. There is no wrong here. It's everything is okay in this market. It's a strong market, a strong downtrend market. So market is falling down and volume is also increasing here. That means it's a good market condition to the downward direction. So it may happen like this also. First, second, third, fourth. When market is like this one first, this one second, this one third, and this one fourth. So it's also okay, because when market create this first candle, weak candle, volume also low here, strong candle, volume high here, again weak candle, then second one, volume again low here, and when market create this candle, it's weak candle than this one, volume more low here than this one, because sequence is okay here. So when market create this type of situation, it's also okay. So when market creating this type of strong spread, when high, volume high, it's okay. So same thing like this one. And when market create this type of situation, that first candle, second candle, third candle, and the fourth candle. When volume, this one, first candle, second candle, third candle, and the fourth candle. So slowly market became stronger, but volume is low here. It not increased, volume not high here, volume low. So this type of movement suggesting us the market movement is not okay. So when market create these two candlestick, it was okay. This one and this one, it was okay. But when market create this candlestick, volume not increased, but candle large than this one, volume decrease, again volume decrease. So now this market giving us information that market may change its direction at any time. That's why this is not a perfect market movement. So we can, market is giving us this information. So when we see this type of situation, when we face this type of situation, so It's not a perfect market movement. So how we handle this type of situation, this is totally different thing. And what is our expected reversal area, this is totally different thing I will explain. So first of all, we have to know. So now we see different types of situation, different types of market in our chart. And I already explained about different types of market, different types of condition, market condition in our chart. So sometimes we see this type of movement of the market like this one. It's a sideway market. So which types of market we have to select for our perfect signal, volume signal, and perfect strategy, and for profitable trading. This is the main question, and this is the main thing we have to know very deeply about the market structure, market movement. So I will explain all the market condition when I explain all the signal candle. So when we see this type of market, this is called a sideway market or ranging market, range. So in this type of market, why market moving like this, up, down, up, down, up, down, up, down? Because the buyers and sellers equally powerful here. So buyers turning the market from the support level here to here, goes up, up, up. Sometimes market one or two candlestick market may reverse. Just finally market when came here, again sellers enter from this resistance level, again turn it to the downward direction, and sometimes we see reversal. After that, when market again came here, again buyers enter from the support level, again goes up. So this type of movement we see sideway type. Sometimes breakout happened, after breakout market again came back to the same area and market again fall down like this. But market finally failed to break this level and finally failed to fall down or fail to goes up. So in this case, this is a ranging market situation. And when when we get any signal candle, volume signal, that time we have to try to avoid this type of market for signal candle. So how and what is the perfect market condition? Now I'm explaining. And sometimes we see this type of this type of this type of this type of movement of the market. So this is called the channel movement of the market. Market is moving in a channel and it's uptrend channel. So when market hit this level, market fall down, again goes up, hit this level, market fall down. So when we add this one and this one and this support and this support, this two 4 point, this one, this one, this one, and this one, so we will get this type of situation that market when again came here, market is falling down, again came here, the support level, market is going to the upwards. So this is the channel movement of the market. So sometimes we can use this type of market also, because although it's a channel movement, but it's an uptrend market. But we have to take perfect trendy market. Perfect trendy market, that means when market is very steep. So when market is very steep, that looking like this type of, suppose it's a support, from this support level market goes up, after sometimes what we see pullback. So market may create sometimes one candlestick, sometimes two candlesticks, sometimes three candlesticks. After that, market again started to going up like this. Finally break this level, this pullback level, and market goes up. Again we see pullback. In this pullback, market create again one, two, or three candlestick. Again market started to going up, 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 up like this. And after pullback, market again started to going up like this. So try to understand here, it's a very basic knowledge, very basic concept. So when we see market changes direction from here, it's the extreme buyer's entry point area, it's the extreme buyer's entry point level. Okay, so I already explained that when we get a strong trendy market, trendy situation in the left side, after changing its direction by creating any chart pattern, when market again started to going up, it create very strong movement. That means buyers become very stronger than the sellers. That's why we get this type of strong uptrend market. When buyers are very strong than the sellers, that time we get this type of a strong trendy market. It's an uptrend market. And here to here, market create most of the time weak candlestick here to here. After that, market again started to going up. Here to here, market again create very weak candlestick. After that, market again goes up. So after creating first wave, second wave, third wave, fourth wave, buyers slowly lose its momentum. That means lose its power when market came to any seller's entry point area, seller's entry point level. It's a very basic concept. I explained several times in price action. So when market create very weak candlestick by the buyer side, and when market came to any extreme seller's entry point area, we get ranging types. Most of the time we get this type of ranging situation, ranging type, buyers, sellers. That means equilibrium type situation, buyers, sellers, like this type of situation. And we have to search in this range, is there any pattern or not? If market create any pattern, it may chart pattern or it may range like this type of range. And when finally market break this range very strongly and again started to falling down, definitely market start from this a strong seller's entry point area. And definitely now this type of situation when market create, definitely sellers are very strong right now here. And when it's an early stage of the market, it create this type of market may create here a momentum also. Market may create here a momentum also, here to here. So after that, we see this type of pullback. And in this pullback, when market start from here goes up, it may create sometimes one candlestick, sometimes two candlesticks, or sometimes three candlesticks. So after that, market again fall down like this. So in this case, when market changes direction from a extreme seller's entry point area, extreme seller's entry point level, definitely sellers are very strong than the buyers. That's why we get this type of downtrend situation. So when we get this type of downtrend situation, so first wave, second wave, market may create another pullback here. That means market may again little bit goes up. That time we always expect in a downtrend market, when market creating this type of pullback area, so market create a very weak candlestick by the buyer side. So when we see this type of situation, that time market again started to falling down like this. So when market create several waves to the same direction, that time slowly sellers become weak and sellers lose its momentum. Finally, when market came to any buyers and extreme buyers entry point area, it's not like that market goes up and again market came to the same level. No, it may reverse from here also. If we see previously it's a extreme buyers entry point level, after 1 2 3 candle wave, or after 2 wave, market may change its direction from here also. Just it's an example that after this type of several waves, market when came to any strong buyers entry point area, so if we get any weakness signal, weakness sign by the seller side, that time market may change its direction. So now the main thing is we have to select this type of strong trendy market in the left side, because already market created this type of trendy situation here after any chart pattern, and I will explain so many strategy that how market change this direction, how what's the volume condition, and when we can start going with the sellers after uh, some situation. We can easily understand that yes, now this is the time we can go with the sellers confidently. So volume will give us signal, that signal. So when market started to going up very strongly, that time we have to take signal from the buyers. That means weakness sign, weak candlestick from the buyer side, and we have to place our trade to the downward direction only from a resistance level, because we know sellers enter from the resistance level and buyers enter from the support level. And when market changes direction and started to going up, that time we have to take signal from the sellers, weak sellers, because in a strong uptrend market, definitely sellers are weak than the buyers. That's why market create this type of uptrend situation. And when market changes direction to the downward direction, market started to falling down, definitely buyers are very weak than the sellers. That's why we get this type of trendy situation, trendy market situation to the downtrend market. So I will explain in our next session how market run and what's our expected area, how we can place our trade, and I will give some signal also. So today just only very basic concept only today. So when market, suppose this is the movement of the market, like this one, okay, suppose this one, market is falling down, okay, I'm drawing here, then it will more clear. Okay, suppose it's a extreme buyers entry point area, buyers zone, this one support level, and market falling down. So this one, and okay, little bit large, this one. Like this one. So if this candle volume is this one, second candle volume is this one, now third candle volume is this one. So it doesn't mean that market changes direction from here. Although there is a imbalance here, because a strong candle but volume low here. So it doesn't mean that market reverse from here immediately. Now we have to observe where is our support. Yes, now this one our support. When finally market came to the support level, there is another strategy here. It's not possible for us to go each and every time 5-minute chart, 5-second chart to take confirmation. I will give another signal to predict the next movement of the market very easily. Just it's a very basic concept. If we can analyze this candlestick in 5-second chart, so we can easily know what is happening here exactly at the support level. Imbalance here, so market came to the support level. So what's the internal function of this candlestick? Inside function. So if we go to the 5-second chart, market will market will give us 12 candlestick inside of this 1 minute one candle. So and 12 candlestick, each and every candlestick have a volume bar. 5-second candle and that candle have also volume bar. So if we get any bullish candlestick that volume very high than all others candlestick volume, so that time more possibility that next movement of the market to the upward direction, because market is now after a long uptrend and after a long fall down, market is now in a buyer's entry point area, buyer's level. So now the insidely this candle is weak by the seller side and strong by the buyer side. So we can expect next movement of the market to the upward direction because it's a support. So we can take this type of information in this type of situation also. But it's a very basic concept, not our signal or not something like that. Signal candle. Signal candle is totally different. So I will explain slowly. So this is the topics today. So very basic, all the very basic concept today. So 2 minutes remaining, I think. So reason is I will go to the chart. See here, if we observe, and if we start from here, so what we see, this is the candle. This candle volume is this one. Okay, volume is this one. Second candle is weak candle than this one. Volume low here. Candle volume little bit low here than this one. So now this candle is little bit large candle than this one. Volume again high here. So now again this candle is weak candle than this one. Volume is low here. So if we observe here to here, market condition is okay. So now here, suddenly this candle, market strong, create this strong candle, volume also high here. So everything is okay right now, here till here. So now when market create this candlestick, this is little bit weak candle than this one, but volume high here. So that means something happening wrong in the market. It doesn't mean that market reverse from immediately from here. No. So market may change its direction at any time. So when market create this candlestick, volume again high, but so this candlestick is little bit weak candle than this one. So market became weak step by step, but volume step by step large here, high here. So market reverse from here. Okay, so if we observe the previous market condition, what we see, market reverse from here. Okay, if we check the previous history of the market, is there any market? Yes. So previously buyer center from here, after breakout buyer center from here, after breakout buyer center from here, and it's a very from the left side, it's a first point of the market, and market goes up very strongly after after this point. From this point, market goes up very strongly, and all the candlestick are bullish candles and few candles are the bearish candles. So now we can call this one a strong buyers entry point level here, and market again came to this area here, here to here, start from here, market came here. So it's okay, it's okay, it's okay. That means it's validation, it's validation, it's validation, it's validation, validation. Now anomaly start from here. That means something happening wrong from here. So when something happening wrong from here, we have to wait for the perfect area, and we have to wait for the perfect point. So we know from the support level, buyer center. So this market is giving us information that something happening wrong in the market. Market may change its direction at any time. At any time, that means when market came to any support level, more possibility that market goes up. So if we analyze this candlestick, this one, go to the 5-second chart. Okay, this is the area, starting point and in point. So 12 candlestick we will get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So inside of one candlestick in 1 minute chart, there are 12 candlestick, and each candle have volume bar. So now if we observe, this candlestick volume is very high than previous all other candles bar, previous this one and all this candlesticks volume bar. So insidely it was bearish candle in 1 minute chart, but the inside condition of that candlestick is a strong buyer's entry, already entered, buyer's entered in that candle, strongly volume high here. So although it's a bearish candle, and this volume is suggesting us the next more possibility, that next movement of the market to the upward direction, because we already get anomaly from previous candlestick, something happening wrong in the market. Market may change this direction at any time. All the volume signals are the pre-signals of the market. So we already get this signal from here. So market when came to the support level, the internal condition of this candlestick is buyers are strong in this candle than the sellers. That's why when market came to this previous support level, more possibility that buyers enter from here. So these are the very basic, very basic concept today. So from our next session, I will give how market run, first the perfect market movement, and what's the perfect place, how we can take a trade by volume signal, and I will give some signal also from our next session. So this is all about today's session. Thanks everybody for joining today's session. Now I am going to close today's session here.